All right. Good day, traders. How are we doing today? Want to start our weekly analysis. All right. Want to start our weekly analysis right away. And we're going to start from DXY. Of course, whatever is happening in the market, it's DXY that gives a clearer explanation. In case you don't know what DXY is all about, it is USD index. It is the index that measures performance of USD, right? And it's here on TradingView DXY. Okay, look at it from monthly time frame. You see that DXY is very bullish. It has corrected. It has made a push, correction, push, correction. We're expecting another push. Maybe by the time this push is over, this will have come to this level. We don't know what will happen, but in monthly time frame, USD will be very bullish. Okay, USD is going to be very, very bullish. So having that in mind, guys, what we have to do is weekly. Of course, when you look at this weekly time frame, you see from this level that the impulse started to this level. There is no way you can start buying here, even though monthly is telling us that DXY is bullish. Weekly is saying that it has made a powerful rally in such a way that we should expect a correction. So at this level, we're expecting a correction before we have a push to the upside. That is for weekly. We're expecting a correction. Daily, can you see that it's beginning to make sense? In daily time frame, you are seeing that, hold on please. Okay, in daily time frame, you have seen a reaction here. You have seen an impulse here. You may likely get a three-wave structure this way, and then we'll have a push to the upside to break this top, break this top. So the implication of this is that you have succeeded in having wave A of a correction, which look impulsive. You have created an idea of three-wave structure, A, B, and C. In the middle, which is this wave A, that will be your wave B. And then if you have it this way, you should expect to have a push to the downside to break this through, expanding flat with C. It's only when you have these guys that you'll be expecting a move to the upside. Now we are looking for a bigger corrective structure in DXY. For us to see a new move to the upside. Do you understand now? So in the coming session, what we're expecting is for in 1 hour time frame, we're expecting DXY to possibly break lower. Okay, because you see this impulse here, you see this, you may receive this up and down. Somebody getting me? You remember that in daily time frame, we are saying that we want DXY to come down a little before going up to have a three-wave structure. When we get to 1 hour time frame, we are going to now understand how that moving down is gathering momentum. Can you understand? Look at it. Let me now clear everywhere. Let me clear everything so that you can understand the construction we want to do right away. Right. So now you have this wave to the downside, three-wave structure. Keep it there. Okay. Now you have this impulse 1, 2, 3, 1, 2, 3, 1, 2, and 3. Okay? Somebody does not understand. Hey, I don't know how to explain this, but watch me do it clearly. Watch me do this clearly. We want a downside before the upside. Okay? So now you have a 3-wave down here. Then in the whole of the middle here, all you're having here is corrective structure. Okay? But then, if you look at the corrective structure, you see a wave down, a wave up, a wave down. Okay? You see another wave up, a wave down, a wave up. Okay? So this wave down is W, wave 3 waves up, X. Then here you should expect another 3 wave down to make Y. It's only then when that Y is completed that this wave you see here, this one here will now be a structure correction. You have this wave. This will be X. Then you now have 1, 2, and 3, which is this one here. This one here will be replicated here. Okay, that is when that wave down I told you will happen. That's when this correction will be over in 1 hour time frame. Okay, in 1 hour time frame, it will be over. Then you can then have a push to the upside. It can even come as low as to break, as low as this side to break this low, and then you now resume the move to the upside. So the essence of starting analysis with DXY is that if you are able to forecast exactly what DXY is doing, it's most likely that you'll be right in any pair you want to trade. Because if you go and backtest, go and check the time that DXY was making this move to the downside. Okay, go and check the time DXY was making this move to the downside. You can just pick a vertical tool, do it like this. Check this time here when this impulsive move to the downside was happening in DXY. Go and check the corresponding time in all the pairs in the market. They are also making either a bullish move or a bearish move. That's to tell you that if you're able to get the exact point in DXY that you are going to have an impulsive move or a continuation move, either to the upside or to the downside, you will most likely get your pair right, the right time that your pair will move, you will get it. That is why you notice that sometimes I just don't trade. Okay, when it's an example of a time that I don't just trade, look at it. Look at this. Let me clear some. Look at this impulse. After it, what are you seeing here? You are seeing a correction. At the time that this correction is happening in DXY, that is the time that 90% of retail traders lose their money. Why? They are trading when DXY is correcting. When this one is correcting, they are trading. And whatever pair you are trading, okay, let me give you an example. This DXY, let's check this time. What is this time, guys? Let's check. This is we are dealing with real data. Okay, let's check the time that this impulsive leg is happening on DXY. That is on the 16th June 2022, 1 p.m. Let's check a pair. We can decide on a pair. Okay, let me decide on my own. Let's not go into any USD pair. Let's go to let's see Aussie CHF on the 22nd, right? On the 16th June, right? Where's DXY again? Let's get it right. We don't need to hurry today. This is a day of training. All right, that's on the 16th June 2022, 1 p.m. Let's go to Aussie CHF on the 16th of June. You see that Aussie CHF has no relationship with dollar. But what I want to prove to you is that the greatest indicator you can find in forex market is DXY. DXY is what confirms the availability of volume in the market. Somebody will ask me, what's the relationship between CHF and dollar? Look at it. 16 June 2023. His own even started 9 o'clock. Can you see that date? You see the move? Boom. To the downside. You see the move? Boom. To the downside. The same thing happened in DXY. Look at it. On the 16th of June. What do you see? Massive flow to the downside. What pair is this? AUD CHF. Go to DXY. Somebody said he did not see it very well that time. When I was showing them, he did not see it very well. This DXY. What time is this? What day is this, guys? Let's work on the date. This is 16th of June. 16th of June. Here, indication had already started. 15, but 16th of June, you see massive impulse to the downside. Here too, started by 9 a.m. in the morning. Look at it. That's where the impulse started from. 16th of June 2022, 9 a.m. in the morning, massive move to the downside on DXY. And if you go and check this same day on all other currency pair in the market, you are going to see either a powerful bullish rally or a powerful bearish impulse. And I've showed you example of AUD-CHF that has nothing to do with US dollar or euro. Look at it on the 16th of June. What do you see? Massive move to the downside. Do you see now? Let's go and check another pair. Let's check AUD card. AUD card on the 16th of June. On the 16th of June. 16th of June. What do you see here? Massive move to the upside. This is exactly 16th of June. 16th of June. What do you see? That is where you caught this. That is where you caught this move to the upside. Yes. Can you see that AUD-CHF was having a move, a powerful move to the downside? Why? Because it had a sell setup. It had a sell setup. Whereas AUD card was having a powerful move to the upside. Why? Because it had a buy setup. So what I am concerned about right now is not whether is this the move should be a buy or should be a sell. What I'm concerned about is that DXY confirmation of structure and making a continuation move or a reversal move will signal the completion of structure and either continuation or reversal in all other pairs in the market. Why is it so? What makes USD unique? Is it not just a currency that is spent by a country called America? No, it is far more than that. What do I say? It is far more than that. Okay? The reason why it is so is that 80%, 70 to 80% of countries all over the world have USD as their reserve currency. Reserve currency. That's number one. Number two, USD is the most traded currency in the world. Most of economies conduct their businesses in what? In USD. So can we check another example? We can look for another example that is not related to DXY at all. Let's look at Gbp Aud on the 16th of June, 2022. Do we have a consolidation or an impulse on this particular pair? Oh God, look at it, guys. This is 16th of June, 2022. What do you see here, guys? This is impulsive move to the upside. All right. Does Gbp Aud has any relationship with DXY? No. But why are we catching this move at this particular time on Gbp Aud? Of course, you see that this is a corrective structure to the downside, okay? And I was able to catch this move with my intermediate class. I think some of them are on this webinar and they can attest to it. Okay, we had a three-wave structure here after this push to the upside, and I said we need to get in. Okay, I think we made a mistake. We got in too early. All right, we did not envisage the fact that this was going to give a zigzag corrective structure. And you know, our rule for a zigzag corrective structure is a correction to 78% retracement. Can you see? Where is it here? Where is it here, guys? 78% retracement. It was after we were taken out that we now got in again and we caught this move. We caught this move. I caught it right from here to here. Think about 300 pips or so. 300 pips. Where's ruler? From this level to this level. Yeah. Can you see? I don't lie. 300 pips. Just a small account. I went in with 0.2. And this is what I caught, $500 and something. Do you understand now? So, but what made me to have that assurance that we're going to have this move to the upside? What made me to have that assurance? I was always on DXY. I was always on DXY, and you can see 16th of June, DXY, 16th of June, you have this massive impulse to the downside. I don't know if you understand. Can we pick another date and see? Somebody will say, maybe this guy is lying. Maybe he's lying, doesn't know what he's doing. Let's check on the 9th of June, 2022. I have not tried this. I've not checked this date. I'm just giving you a random date. Let's check. 9th of June, 2022. You have a powerful rally on DXY to the upside. Can we check another pair, AUD-JPY, on the 9th of June, 2022? On the 9th of June, 2022. 9th of June. Okay. Oh, goodness. What is this, guys? This is 8. We have to go to the 9th of June. All right, so you can see it. We are looking at what? 11th of, no, on the 9th of June. Can you see? We had a move to the downside. Can you see? And if you go to DXY and check the corresponding date, DXY, the corresponding date on the 9th of June, what do you have after this corrective structure? On this corrective structure, you have this massive move to the upside. Can you see? Somebody will say, you have done two now, two samples. Can we look at another one? Yes, let's even go back. Okay, this is a complete corrective structure for those who understand Elliott wave theory, guys. You have a move down here. You have a move down here. This is, sorry. You have a move down here, sharp and sharp. And then you have with A here, let's go in capital letter. You have with A here that comes down. You have with C here that comes down. A is an impulse. C is an impulse. B is a correction in 3 waves. 1, 2, and 3. This is a corrective structure in 3 waves. So this is a balanced structure. A, 1, 2, 3. B, and then C. So after that, we the Elliott wave analyst will already know that we're going to have a move here on DXY to the upside. Okay, and you see this leg, A leg is already equal to C leg, so no room to the downside. Let's check on the 31st March 2022. DXY is forecasted to make a powerful move to the upside. Okay, I'm showing you secret on why I give 10 setup, and all the 10 will face the direction I forecast. I'm showing you the secret now. So look at it now. On the, what date is this? On the 31st of March. Can we just check any pair? Maybe we should just check any pair. Maybe CHF JPY. You know, as useless as the pair is, let's see whether it makes a powerful move on the 31st, or it was on consolidation on the 31st of which month? May, right? Is it May? Let me check. DXY, was it on the 31st of May that we were expecting that move? DXY on the 31st of May. Where is it? Okay, here. No, not here. Went back 31st of May. I'm taking my time to show you this stuff, guy. It will help you. It will help you. 31st of May. Where did we see corrective structure? Was it 31st of May? No. Okay, in order not to waste time, thank you, I've seen it. It was on the 31st of March, 31st. You can see I'm going backward. So what pair should we check? Let's check CHF JPY. 31st of March. Did we have a completion of structure and an impulsive move to the downside or to the upside? Can you see on CHF JPY on the 31st of March 2022? Look at it here. Look at it. Look at the move. Boom. Why do we have this momentum? Let's analyze the corrective structure, whether it's a balanced one. Let's analyze it, guys. A, 1, 2, and 3 running flat. B, and then C. Can you see? So this impulsive leg must continue to the upside, and you have the first leg of it, impulse. Somebody say, why are you calling this one impulse? It is a 5-way structure. 1, 2, 3, 4, 5. A clean one. Then what did I tell you? A correction to 50 to 61.8. Impulse, first rule. Second rule, you must be able to define the corrective structure. Okay, you must be able to define the corrective structure. 1, 2, 3, 4, 5. This is a triangle. And then it's coming to what? 61.8. And then exactly here, you have the move to the upside. Boom, on the 31st of March. Can you see? Because there was liquidity in dollar. That is why that liquidity will cut across every pair in the market. Somebody say, what makes this one to be a triangle? That is the argument now. That's the argument now in the mind of some of the viewers. What makes this a triangle? I will prove it to you that it is a triangle. This is not a zigzag. It is not a flat. It is no other structure than a triangle. If you are looking for a perfect triangle, you will not get it in all the time. Okay, if you are looking for a perfect one, you will not get it in all the time. But this is a triangle. Let's see. This is A, B, C, D, and E, and they move to the upside. So, if this is not a triangle, what is this? It is a triangle. Is that okay now? So, but the bottom line is that you have seen how we cut the move on the 31st of March. On the 31st of March. Why was this move coming? Because there was volume in the market. And the pair or the instrument that gives us the signal of that volume is DXY. So when I tell you that my number one indicator in the market is DXY, this is the reason. It gives me when to trade and when not to trade. And if you are hearing me right away and you belong to my trading community, and you discover that there are some days I don't bother to trade, some weeks I may not trade more than once a week. Why? Because DXY is in correction. Let's go back to DXY. When DXY is in correction, I don't trade. You see? Look at it. Let's go to the recent move. You see why trading has been difficult for like a week now or two. Look at it. Correction, consolidation on DXY, nothing will happen in the market. If you made money in the last 1 to 2 weeks from on the 16th of June till now, or let me say from on the 17th of June till now, if you made money in the market, you are genius. You are genius. I am telling you, because when DXY is in corrective mode, you are going to see market making up move, down move, up move, down move, up move, down move. You are going to have a lot of break-even trades. And if you manage to make some pips, you must be a genius. But let this corrective structure be over and DXY is pushing up. Oh my God, go and check all your peers. All the setup will have been matured and the move will start on all other pairs. So that is it on DXY, guys. We're expecting a move down, and after I push down, when this wave here, right here, guys, when this wave here, when it is balanced here, whether push up and they push down or push down, push up first, it must push down. This push down you have here must come here. If it doesn't come here, there's no movement to the upside. They say, who says so? I said so. If this push down does not happen right here, nothing to the upside, because structurally it is incorrect for this market to start to move upside forever from here. No. It has to make a way, come down here, pick liquidity and move to the upside, or alternatively, if you see it pushing up here, don't touch it. When it gets to this level, it's going to push down. And it is this push down that balances this wave. And that's when we are going to look for buy opportunity to the upside. And when we are doing the buy opportunity to the upside here, all the major pairs will start to fall in the market. GBP, USD, Euro USD, New Zealand USD, all of them will start to fall. And I'm going to prove it for you. I'm going to prove it to you rather. Euro USD. Euro USD. Whatever happens here is none of our business. We have 3 waves up. Consolidation here, it must go up. Pick liquidity here, boom. This upside, this downside I told you in DXY is going to be upside here in USD. If this upside does not happen in USD to this level, I've marked 1.0700, nothing will push to the downside. And we may not be interested in everything that is happening here. We don't trade here. We want to trade here. We want to trade here. We don't trade in the middle. Do you understand now? That is a proof that Euro USD will come down. Let's see a proof in, can you see? I've already shown you the structure. The structure is already there. Okay, we need a push down, we need a push up, get to this level, and a push down again. This is where we want to get involved. And we are following, we are monitoring what is happening in DXY to give us a guide to when our structure will complete on major pairs. Remember, you must go to daily to go and see when you get to this area, when you get to this level here, guys. Okay, let me show you. You see, this is part of corrective structure. This is part of corrective structure. We want this to just come. If you can break this low, fine. If it does not break it, it's still fine, because if at this level, if it gets to this level and it gives you a candlestick that matter, which is a bearish engulfing at this level, it means that we are going to have a running flat and not an expanding flat. And from there, we can step down to 1 hour, look for our impulse, look for correction to 50 to 61.8, and then take a sell opportunity right here to the downside. Okay, that's what we are expecting on GBP USD. Then I will also say to you that it's very instructive to note that the better the push up of GBP USD, the more the push up, the better it is for us. Because right here, we cannot define any resupply level here. Okay, and if you take this impulse before the correction, you see that this market is going to form, it's likely going to form an expanding flat, because this is wave A and this is wave B. Since wave B has broken the level, the starting point of this wave A, we expect wave C to also break the level of wave A, which will come here. And every expanding flat or zigzag will naturally comes to 78% retracement. And the third rule, the third entry rule is that when this market comes to 78% retracement, if we look at left-hand side, what did we see? Did we see selling pressure? Yes. Did we see supply zone? Yes. Where is the selling pressure? Where is the supply zone? Check this impulse to the downside here, guys. Check it. Look at the structural area, where I don't take every area as structural area. I don't take every zone as structural zone. My fib level, based on the structure, corrective structure before me, my fib level supposed to be 78% retracement. And at 78% retracement, which is this structural area, guys, I want to now ask you, when you look at it very well, which candle here is the biggest candle to the downside along this structural area? Look at it here, guys. Look at the candle here. This what is called imbalance candle is unnecessarily bigger than other ones. Okay, you want to now spot the candle that is before it. Look at it before it. Where does that one stop? Pick these two, drop it here. Look at the candle that formed after it. Where does it stop? Pick these two, drop it here. So this in between is the supply zone. And if this market should respect this analysis, this is where we expect this market to drop. It has no incentive to go beyond this level to the upside. Do you understand? And when DXY has completed its down move and is about to go up impulsively, this one will be going down impulsively. Do you understand? So that is it on GBP USD. Okay. I've already done some work here on USD JPY on monthly time frame, guys. You can see it's powerfully bullish. On monthly time frame is bullish. Okay, let's check IDC. IDC will give us a better data. Okay, can you see? If you did not go to IDC now, you'll be thinking that USD JPY was coming from down, whereas it's coming from upside. So all these ones you are seeing here, right here, is a corrective structure. So many people have been anticipating that USD JPY was going to make a move to the downside. But even myself, for some times now, I always think so too. But this is totally false. It is just lack of understanding of market structure. And I've told you, market structure goes beyond higher high and higher low, and then lower high and lower low. It goes beyond that. This is just higher high, higher lows, lower high, lower lows is elementary market structure that should be confined to the stage, to the level of somebody who just began to learn in a week time. Okay, but if you have been learning FX for the past 2 months, 3 months, I don't want you to be talking of higher high, higher low, lower high, lower low, as they used to teach you in Facebook and Telegram. It's trash. You don't. It's not that you understand and you trade the market efficiently and effectively. It goes beyond that. Okay, look at here. Look at a market that has been falling. Look at this market that has been falling. Okay, it has been falling down. Okay, if a ball was dropped from a 2-story building, you drop a fully pumped ball, the kind that is used, not in Nigeria League, the kind that is used in English Premier League. You understand? You drop it from 2-story building and it drop on the floor, bam. Where do you imagine that the bouncing was going to stop at the window level of the first floor, of the ground floor? You think it will not bounce higher? Because of the weight, because of the impact on the floor, boom, it's going to bounce up higher. So that's the same thing that's happening here. You see an impulse, you think that This pair now just bounce a little here and begin to go down. No way. No way. Based on the idea I've been giving you guys for quite some times now, you will see that this is a corrective structure. Let me show you. Do you see a reaction? Reaction is always very, very short. What do I say? Reaction is usually very, very short in the market. And somebody will ask me, what do you mean by this reaction? What do you mean by this reaction? When the market is making a big impulsive move to the downside, okay, when that impulse is going to, gradually get to an end, it's going to make a pullback. That a pullback is eventually going to be part of the corrective structure of that impulse. Can I prove it to you based on this monthly time frame of USD JPY? Yes, I'll prove it to you. Do you see this move? Small reaction. That's what I call reaction. You see small reaction to the upside? Okay, now you will see the analysis now. You see another move, three-wave structure down. And you have this is running flat. And this running flat you see is W. Every corrective structure in the market must come with either ABC or WXY corrective structure. But the more you understand this structure perfectly, the more you get the completion of such structure. This is W. I told you when you have an impulse, the first three waves in the opposite direction of that impulse is W. That's if you make another one, that will be X. Why is this one X, guys? Because this is three-wave structure in the direction of that impulse. That's why it is called X. So when you now make another three waves against the impulse, since this one is W, X, the next one is Y. Do you understand? If we still make another three waves here, it will still be X again, because it's a corrective structure in the direction of the impulse. So it is treated as like kind of like impulse. It's a connector. Do you understand now? So let's move on to the other one. So if this is W, then where is the S, guy? Look at it. This is what is called a contracting flat. You see, a contracting what? Flat. You must go back to my lesson on flat corrective structure, A, B, and C. And this one is what? This one is X. WX. So what are we looking for, guys? We're looking for Y. And in Y here, this Y here has also developed a contracting flat. I will show you. See this? Some people argue with that it's a triangle, but I don't want to take it as a triangle. I want to take it as a flat. Why is it not a triangle? Because this wave here is a diagonal. All right. So if you have A, if you step down to lower time frame, you will see that this is a three-wave structure. So you have A here, you have B here, you have C here, with C coming with what? What is called an ending diagonal. You remember? Go back to my lessons on diagonal. You see that a diagonal can exist in wave C of a correction, just as in wave 5 of an impulse. Do you understand? So what this means now, we want to catch Y wave. And what it means here, that for Y wave to have deemed to be completed, we must have equal leg of this wave A, B, and C to the upside. We must have it equal leg. This one here must be equal to this one here. Can you now see that we are now close to the ending of what? Of USD JPY rally to the upside. So now what tools are you supposed to use to confirm whether this A is now equal to this C? You now go to what? Trend-based fib extension. Trend-based fib extension, drop it here, take it back to the end of the corrective structure. Where is 100% extension to 123% extension? Right here. Boom. Boom, guys. This is the expected level that structurally we expect USD JPY to get into. But I am not telling you that based on my understanding of liquidity, all right, and smart money concept, I am telling you that if you draw a horizontal line right here, you will see that this level that we're expecting this pair to come down is forming equal high with other levels. Liquidity does not reside in equal high. That is the problem of retail traders. 80 to 90% of educators in this forex market, they teach you to sell at resistance. There is no liquidity at resistance. Liquidity rests above the resistance. It does not rest on the resistance. If you sell this pair exactly at this level, you will lose. Thinking that you are going to catch this move to the downside, you will lose. Even though we have equal leg to this level, most likely you will experience or encounter just a reaction that's going to form part of a corrective structure that will launch you to pick liquidity at the upside. It will now launch you to pick liquidity here. Liquidity rests here. Look at it. Do you see any buy candle here? Do you see conflicting signal here? No. It was falling. Sell. That is where liquidity is rested, guys. Not at 155. You have a long way to go in USD JPY. And it is only when you get to this level that you find comfort. USD JPY will find comfort selling to the downside. Do you understand now? That is monthly, weekly. Some pair, I just give you the rundown of my expectation, and some I will have to analyze and give you the real theoretical analysis. You understand? Can you see? Weekly is still bullish. But are we supposed to buy at this level? No. What are we expecting? We're expecting some sort of correction for us to move to the upside. Daily. But you are beginning to see some corrections. You are beginning to see some reaction right here, guys. I'm beginning to see some reactions. You have this, you have a move. You have this, you have this. You will agree with me that the way it was moving fast here is slowing down right here. Okay? It's slowing down right here. And you can confirm, you know, that slowing down by looking at the divergence. Can you see that in this pair right now, you are having a divergence because you are having a higher high here. And guys, what do you have here? Lower high. Can you see? This high here is higher than this high. But if you come here, this high is lower than this high. Okay? That is a confirmation that this market will soon fall. But this fall that it will soon fall is not a reversal. That fall is going to be part of corrective structure. Then on that daily, you see that you already have this move right here. Okay, you have this move right here. You have this move that breaks the top. Go back to 1 hour. Go back to 1 hour. So what we are expecting here is that if this were to be a reaction for the downside, you know, I told you that you take a fib of this level of this move. I told you, you take a fib of this move. I'm going to show you something. I've uploaded a video today that explains this. If this moves to come, if this moves to be a zigzag corrective structure, why do we anticipate that this move will be a zigzag corrective structure? I want to teach you one trick right now, guys. Can you see that the three-wave structure is almost hitting 50% retracement, but it has not hit it. So we are not qualified to sell at that level. So based on that, we will expect a reaction here that, and this place will be W, this place will be X. It is the Y that is going to catch that volume at 78, where this level, this size here of the wave will be equal to this one. Then you have to move to the downside here. Do you understand? But there was something that I thought, there was a modification to my 4 entry rule that I taught today. I believe some of you must have watched the video. I said, if you are looking for your impulse in 1 hour time frame, you need to look at the corresponding level of that impulse at the left-hand side, which is here. Which impulsive move is better here? Is it this bearish that is better or this bullish? It is this bullish that is better. It means at the corresponding price level, the buyers were stronger than the sellers. It means the sellers were struggling. And this was supposed to be our impulse. So in that case, we are not going to work based on that in our entry. We are going to wait when this one gets to 78% retracement. We are going to wait to see another impulsive leg here. So that impulsive leg, once it is stronger than this correction to the upside and is stronger than this correction to the downside, then this impulse to the downside, then we'll not take this as our main impulse. And this is the one we are going to take the correction to 50 to 61.8 or 78 in case of zigzag or expanding flat. And from there, we'll now find sell opportunity to the downside. We're not going to sell short here. We're going to sell it here because this there was excess demand over supply in this corresponding price level, and we are looking for excess supply over demand for us to consider it as a valid impulsive move to the downside. Is that okay now? So that's the fifth entry rule that I have. I had 4 before. I've added 1 modification, and I have 5. This will prevent you from entering market prematurely. Is that okay now? All right. So that is it about USD JPY. Let it come up, get to this place. The condition that will make us get into this sell is if we see impulse here, then we'll find the correction, enter here, stop loss above 78, TP down. All right. Euro JPY. Okay. You will see a difference between what I just told you in USD JPY and Euro JPY. Compare this move here and this move here. Let's say at this level. How many candlesticks from this level to this level here? Only 2. Big one here, 1 and 2. How many candles here? 1, 2, 3, 4, 5, 6. 6 candles. So it took only 2 hours for this pair to move down here, and it took 6 hours for it to move up here. So which one is powerful? The bearish candle is powerful. Therefore, there are in this corresponding price level, there was excess supply over demand. So the sellers predominate the buyers. So we can therefore take this one as an impulse. And at such, we will expect this market to come to 78 if it forms a zigzag. 1, 2, 3, another 1, 2, 3, another 1, 2, 3, coming to 78. If you feel this level from here to this place, this is 78% free retracement. Put your stop loss above and have the market move down. Do you understand? In this case, we do not need to wait for an impulse to form here for us to see the correction. No, because we already had a valid impulse here. But if this impulsive move down here is not as convincing as this bullish move up here, we are not going to sell here. We wait for an impulse correction before we sell here. Do you understand now? So that is it about this pair. Then let's look at British pound JPY, British pounds JPY. Okay, I've done a lot of work on this already. So we've got to see what happens next week. It's either this wave down, it's either we have this move down and a push up to complete this structure as A, B, and C. That would be good. In fact, that would be good. C. This will be the best. But in case it doesn't happen like that, what you should expect is that, because right now all these economies are very sick, no one is actually strong now. If this is a complete 3-wave structure, which it can be, then we could have 3 waves here, 3 waves here, 3 waves down, bigger structure, and push down. Okay, that will still be a W, X, and Y. Why do I project it that way? I'm projecting it that way because this 3-wave structure here is relatively too small. Okay, this is too small. It's too small, but it's bigger than what is happening here. Okay, when I talk of relating waves together, this is what I mean. Can you see? Do you see these 3 waves here? Is senior to this one, is bigger than this one. So if it's bigger than this one, it means that this is the main three waves. This is a three wave that is a connector to this one. And I'm looking at the connector as too small. So if that is the case, then you may have the connector as 1, 2, and 3, 1, 2, and 3, 1, 2, and 3. This is a big enough connector to correspond to these three waves down. After this is done, you see a supply zone here. Then you have 1, 2, and 3. So, and you can even see that after this 1, 2, 3 is formed, the structure has not gotten to this level. So what you have to expect is that this is the first leg of three-wave structure. You still need to expect, if it's to form WXY, three-wave structure here and a push down. But if it's just an ABC structure, then it will not happen like that. Rather, what will happen is that this one will push down very well. Then you see a corrective structure and then it pulls down very well. And in that case, it will be a 5-wave structure, A, B, and C. And then since this did not break the top here, this is a regular flat, impulse, correction, impulse. If you break this low, fine. When this low is taken and it has to the downside, then you'll be looking for your buy opportunity, because GBP JPY may not continue to fall at this level. We have not seen a kind of momentum that we need to see to know that GJ will start falling. Can you see a pair that want to start falling, guys? This is not how it will look like in the higher time frame. So as far as I'm concerned, what is happening to GJ right here real quick is a corrective structure. Once this get to this level, I'm already targeting this demand zone, guys. This is a very clean demand zone to look out for on a weekly time frame. You already know how to determine demand zone by now. So when this market get to this level on weekly time frame, we expect it to make a move to the upside to fulfill structural level. Is that okay now? But for now, we look for sell opportunity. Good. My darling gold, darling gold. All right. So monthly, some of you are trading 2 minutes, 3 minutes time frame. I greet you, well done. It's not easy. All right, it's a lot of work. We are looking forward to gold getting to break this low before it make a move to the upside. That's what we are looking for in gold. Nobody is buying gold now, except you are dealing with lower time frame. We want to sell. Even myself, I'm not going to give buy trade, whether in my Signal channel or in any Telegram group channel, because this is not too good. It's going to stress you. So what we are expecting right now is for this pair to come, break this top, come to this supply zone right here. From here, guys, from 1900 to 1925, go and write it down, guys. Gold will crash to the downside. If you like, go and set limit at this price. Make sure you keep your stop loss at 19670 or so. We are going to set it at 1920. All right, but you will catch the move to the downside. All right. So if you go to 1 hour time frame, you want to ask me what's going to happen. What's going to happen 4 hours first? Okay, you know, I've been giving this trade, but I don't want to stress people. This is counter trend. I don't want to give a trade that's merely completion of structure. You have a 3 waves up here. Everything that's happening here, guys, is correction. You need to have 1, 2, 3, 1, 2, 3, 1, 2, 3. Okay, and after that, you might have another 1, 2, 3, and then a push up. Okay, that push up, guys, should get to this level. I want you to come break this top, get to this level. Okay, then from there, find a move to the downside. That's going to be a very fine move. So allow you to be doing whatever he's doing. I don't want to give this trade to the upside, except we have a very fine, impulsive move here. All right, except we have a very fine impulsive move here that is corrected to 50 to 61.8, and then we can take a move to the upside. I say a very fine impulsive move in the sense that you are seeing the kind of bullish move that resembles something like this. Can you see that this bullish move is not sick at all? something like this, if I see something like this, it's not sick. Just like something like, I'll show you, GBP card, I'll show you something, guys. Remember, we are on good. If you see something that look like this, can you see? You don't lose such trade. This is a fine push to the upside, fine push. You want to see a clean bullish move like this. When it's corrected to this level, you will have it. I already told you when this one was developing at this level. What did I tell you in Wednesday live session? I said this move has not gotten to 50 to 61.8. So all this one that is happening here is fake. I said, don't listen, it's fake and it's coming down. What happened? As it went up, what is it doing? It's coming down. Okay, it has to come down, push here correctively, and we must be able to define this nature of correction. If it is 1, 2, and 3, we must be able to define it. And when it gets here, we take a buy to the upside. But let's go back. I just want to show you what I mean by fine push. This is an example. When you're talking of sell push, this is a fine one. You see a fine one. This is a fine push. You want to see this. When you see this kind of fine push, it must continue to push down at 50 to 61.8. Look at it. It has to push down. And this time around, it's forming a running flat and it's pushing down. Let's go back to gold, please. Let's go back to gold. Okay. So in gold, so that's what we are expecting. Let it come up. Let it come up. Then if we see a fine impulse here, we're going to take the correction and do the buy again. All right. How do you draw the demand zone in GBP card in the 4 hours time frame? You just showed us. Okay. In GBP card, it's very simple. I don't use 4 hours time frame for my entry. And the reason why I don't use 4 hours time frame for my entry is because sometimes it's easier for me to get my exact demand zone in 1 hour time frame than in 4 hours time frame. But I can also spot it in any other time frame. But let me tell you something. If you see a fine impulse that is not a structural area, that is not your demand zone. That's not your supply zone. What am I saying? Here, it's not your demand zone. Why is it not your demand zone? Because it has fallen outside the structural area. If you take a fib from this level to this level, where is your 50 to 61.8? Here is it, guys. Here is it, guys. These are your structural area. If this market eventually turn out to be a zigzag corrective structure, then here 78 will be your structural area. Okay, but if it gives a corrective structure that is not too deep a zigzag, then 50 to 61.8 is your structural area. So what do I say you should do? Look left. Can you spot demand zone? Yes. Let's spot it together. Where is the fine candle that you can spot at the structural area? Look at it here. Okay, so where is the candle that formed just before it? Where does it end? Right here. Where is the candle that formed after it? Where does it start? Right here. So if that is the case, this is your demand area. This price level is your demand area. When market get to this area, I'll be happy if it corrects a little here so that the drop will drop inside this place. Once it drop inside this place, we'll find a buy opportunity, maybe around 1.5700 to buy to the upside. Do you understand now? It's as simple as that. That is how to get it. All right. So let's look at this one. This one, SDDCHF. We want it to come up for us to have a buy, a sell to the downside. Why do we want it to come down? I'll show you now real quick, guys. Okay, you see, if you go to monthly, I told you, even if you're a day trader, don't forget to visit the monthly. You will see the structure. Let's go to IDC. IDC will give us a better data. All right, you see it. So if you are looking at this market now, right here, guys, you are still not far from demand zone. you are still not far from demand zone. Some days, sometime, this market will have to make a move to the upside to break this top. That's a complete structure for you to come down. Do you understand? Some days, sometimes. But right now, let's concentrate on what is happening here. If you look at this fib right here, real quick. If you look at this fib, real quick, guys, you see that you're already having a structure here. And what is that structure? I'll show you now. Very simple. You have an impulse, okay? And then you are going to see it clearly in weekly. Let's go to weekly. You have a move down, and this move down, guys, is what is called a diagonal. All right, it is what is called a diagonal. And after a diagonal, you have a three-wave structure in the middle. Let me show you this three-wave structure. 1, 2, and 3. And this three-wave structure, it is called what? It is called a running flat. After this running flat, what are you expecting? You are expecting this move down to the downside to complete this structure. You need this move down here to get to at least 50 to 61.8. Simple. This is what you are looking forward to in AUD, NZD, CHF. You want it to come down to this level. Okay, but does it come in a straight line? No, it does not come in a straight line. So just notice this level right here. Notice here, this is where we are coming. Now let's take up our fib out. Let's take up this one out. This is weekly time frame. Now let's go to daily time frame. This is how you do your top-down analysis. How do we know at this level that this market, after making this flag, remember I taught you what you are taught is that after you see an impulse, you must wait to see a correction, and after, what will happen? A move to the upside. That's what they taught you in Facebook, in Instagram, and all those things. Okay, these are fake teachings that gets you nowhere. All right, so what did I teach you guys on how to get this kind of structure? That this is not going to go upside. This one is nay. Okay, this one is nay. How do we know that this one is nay even before it forms? Apart from the fact that we have seen the structure here, there must be continuation. You now carry out what is called a fake flag test. What do I call it? A fake flag test. Can you see? Can you notice this, guys? At this corresponding level here, this is the level here. Okay. Can you see that this market, as it was making a lower low here, this low lower than this low, lower than this low, lower than this low, lower than this low? What do you see here? Lower than this low, lower than this low, lower than this low, lower than this low. Can you see? Lower low, lower low, lower low, lower low. When it happens like that in a flag, it is not going to, there is no divergence. So it is not going to move to the upside. Two things you are going to wait for you to sell is the last push that break the previous low. Where's the previous low? Here. Can you see? You must check the last push that break it. Look at it here. Break it. So look for correction of that last push that break the previous low. And look for 61.8. Look at it, or 78. This is zigzag. So 78. Look at it at 78. What do you see? Boom. And another confirmation is that you have to go to your stochastic. You will see that stochastic has reset itself to the top exactly at this level. Boom. Can you see? Stochastic reset itself to the top. RSI below 50. There is convergence and no divergence. Then you have your move to the downside. But are we gotten to the level we are looking for? No. So if we have not gotten there, are we expecting a correction? Yes. So if we see a correction, at this impulsive leg down, can we spot a supply zone? Yes, look at it here. So we're expecting a correction back to the supply zone. And when we get to supply zone, remember this is daily. What we are looking for is candlestick that matter here. Let's say you see engulfing. As soon as you see engulfing here, what do? Step down to 1 hour time frame. Okay, when you get to 1 hour time frame, you must see an impulse. let it correct to 50 to 61.8, take your sell. Where is your target in this scenario? This is your target. Where we have spotted before, this is your target. Before you have a move to the upside. Why is this level a target? It is the target because the correction of these bigger 3 waves to the upside, 1, 2, and 3. That 3 waves is corrected to 50 to 61.8% retracement at this level. That's why at this level here, we'll now be expecting a move to the upside. It then means that you are having, because this is not an impulse, this is a 3-wave structure. So we are going to call this one as WX. Then we'll be looking for another 3-wave structure that resembles this one. That will be up, correction, up, and that is why. And if this market we still want to go to the upside, well, you are not in my mentorship program. If not, I will tell you what you will see between these 3 waves up here and 3 waves up here. I will tell you how to test whether you have a correction and one upside, or you are going to have a downside. I have a proof and a test for that, but that one is reserved for my advanced mentorship class. Okay, I can't give it free here. All right, so that's what you expect for NZD CHF. Do I have one other pair to discuss before we go? Yes, let's go to Euro GBP. Okay, this Euro GBP, I will not do the top-down analysis, but let's just go straight to 1 hour time frame. What we're expecting is simple. Right here, when this pair was here, I gave a pending order. Can you see my alert? It's still showing 0.8650. We want to sell at this level because we have seen on a daily time frame, I think we have seen candlestick that matter. All right. This is a candlestick that matter right here at the top after completion of structure. So all we have to do now is to seek to go to 1 hour time frame and see if we're able to identify our impulsive leg to the downside. Are we able to identify it? Yes. So let me show you now. Okay. So from here to this place, where is 50 to 61.8 is here, guys. So when this pair just remain like 4 pips, about 7 pips to take my order in, it started reacting downside. So I told my guys in the signal group, jump in, sell. They sold, and on getting to this consolidation level, it started to slow down. Immediately I discovered this, I said, close your trade. Close your trade, because if this is to go down, it's going to break it and begin to go. But for the fact that it did not break it and got to this level and was consolidating, I already spotted something very vital. At that moment, I saw that this could be our first 3-wave structure, second 3-wave structure, third 3-wave structure to now break this top. This will now be WXY structure. And at that level, when we get this WXY structure, that will be a better, a sell opportunity for us. And again, in looking for the last confirmation, you want to see that there is equality in strength in both demand and supply. When you check this push to the upside here, check push to the downside here, they are of equal strength. So in that case, I want to take my trade from here. But supposing that this selling pressure here is not as confirmed, it's not as healthy as that of the buy pressure, what did I say we would like to do? We like to, in that case, wait for one impulse here that is as strong as powerful, or more stronger, or stronger and powerful, more powerful than this one. Then we now take correction to 50 to 61.8 of that impulse, and this will be our entry, not here, but here to the downside. Can you get what we are doing now? Can you get it? Simple. Stop loss above 78, boom, not here. But in this case, it's going to be here. Why? Because we have seen a fine impulse here, and we have been able to define the corrective structure appropriately to 78% retracement, because it's a zigzag corrective structure that is in form of WXY 333. Okay, so we're able to define the impulse, we're able to define the correction, we're able to get to the fib level. And then when we look left, the impulsive move, the bearish impulsive move to the downside is convincing. So we have no option that to take our trade to the downside. Is that okay now? Where's our target? When you go to 4 hours, for instance, you will see that, you see what I'm anticipating? I'm anticipating that this is just, let me see, it's a corrective structure, this is a wave up, this is another wave up. Okay, so this is a W, then you have a reaction down, this is a 3-wave structure to the upside. We are looking for a 3-wave structure down. This is X, okay, and we are looking for another 3-wave structure to the upside, and that is Y. This is when we'll be expecting a move to the downside. And when you look at it on the weekly time frame, you really want a situation where this market gets to demand a supply level. Okay, any level below here is not too good for this pair to fall gallantly. Okay, we want it to come to any area here. It's a cleaner area where there was excess supply over demand. How many healthy bullish candles do you see along this area? Less. How many healthy bearish candles did you see? Many. For that reason, we will love it. That's why I'm anticipating that we should have a double correction in 4 hours time frame. Okay, when we're able to get this double correction, this our sell is just going to take us to this level, and from there I'm going to look for buy opportunity again to push to the upside to get to this level. And when we get here, we'll do a final fall to the downside to break this low. That is simple charting, guys. That's simple charting, guys. Do you understand? So focus more on your sell opportunity for Euro GBP, and after the sell opportunity is complete, look for your buy opportunity. And then in the final analysis, we are going to have a massive sell to the downside, you know, in alignment with the current fundamental analysis. Okay, so GBP AUD, I'm not going to analyze all the pairs, just I have 2 more to go. No, 1 more to go, please. GBP AUD. This. Okay, we are still in a journey to 1,000 pips. Right now, we have done 258. It's very slow and sluggish, but of course, you know, market is not too behaving well. But of course, you know my position concerning this particular pair. I'm still very optimistic that this market will come down to break this low, because this is what is called equal low liquidity, guys. Let me show you something. This is equal low liquidity. See it here. So, you know, my rule for trading a reversal, for trading a correction after a big impulse, I had expected this to come and break this low, pick liquidity and tap me in for upside. It did not. It made equal low and it's turning back. That's not what I want to trade, guys. That is not what I want to trade. So now you see this fine impulsive leg down, and it's now correcting in 3-wave structure. That's why I instructed everybody that cared to listen, please close your trade on GBP AUD, because this 3-wave structure, I expect it to break down, guys. I expect it to break down, break this low. So in that case, it will now be 1, 2, and 3 W, 1, 2, and 3 X. X is needed to break the low of the W for us to pick adequate liquidity to the upside. Here we'll pick it and form 1, 2, and 3. This 3 will be extended to break this reaction level and tap liquidity at 50 to 61.8. And if you take a fib of this impulse right here, real quick, guys, you see that your 50 to 61.8 is this level. So this is why, or this is how I projected 1,000 pip to the upside. Where is this, guys? This is 1.8400. Then where did we enter? 1.7400. This is the idea of 1,000 pips to the upside came from. And that's what we are still expecting. So go and write it down, guys. We are going to have a breakdown to the downside. This will be W. This one will be X. We are going to pick it together at the low here. Why? We're going to pick it at possibly 1.70000. If you tap it from there, we are going to 1.8400. That's 1,400 pips to the upside. We're going to take it that way, and let's look forward to it. So if you look at 1 hour time frame, let's clear this mess, guys. 1 hour time frame, what do you see? First, let's see whether we saw a candlestick that capture some of these things. Just a minute, guys. So let's look at daily time frame, whether we actually see a candlestick that shows a selling pressure. What do you see here, guys? So whether you like it or not, this is still a structural area. Why? Because there was rejection, and it's creating equal low, and it's creating equal low. This is equal high, rather. This is equal high liquidity, guys. That tells me that the market is still coming to break it. This is equal low liquidity, guys. That tells me the market is still coming to break it. That's what it means. So watch me, watch this thing. You see that you already see a candlestick that matter here. There's a selling pressure on this pair right now. So, and if we go to, I've not even checked it before, but if you go to I will answer your question later. If you go to 1 hour time frame, we're supposed to see impulse on this pair right now. All right. So what I want you to do for me is that I want us to test the divergence, whether there is proof that there will be divergence here. See it here. Let's check divergence. Yes, there's divergence. Can you see higher high here, lower high here? Can you see? So because there is divergence, a move to the downside is confirmed. So, and we have seen an impulsive leg to the downside. All we have to do is that when this impulsive move to the downside is complete, we just have to take a fib and now target correction to 50 to 61.8 to 78 if it is zigzag. From here, we take a sell to the downside on this pair. So most likely that sell to the downside is going to come to break this low again. Okay, come to break this low again, because this, as far as I'm concerned, is a three-wave structure. It's a three-wave structure. 3 here, 3 here, and 3 here. No, this is an ending structure, which is a diagonal. All right, this is a diagonal. This is a diagonal here. Okay, so you have three-wave structure in the middle, which is confirmed. You have three-wave structure here. This is 3, 3, and 5. The diagonal is a 5-wave structure. So that means it's a what? This is an expanding flat. This is a running flat corrective structure. Okay, this one breaks the top of this one. This one does not get to this one. It's a running flat. Okay, and then you have seen a reaction here. Corrective structure, move down. Corrective structure, move down. Where is it coming? It's coming to take this equal low liquidity here. It's equal low liquidity. This market, once you understand this trick, then you can trade the market well. It's coming to break this low. I'm going to focus on this pair next week to break this low. As soon as it cut it here, guys, don't think it's going to move to the downside. It's to deceive people. Many people will be selling below this level, and you are going to see a fast reaction. As soon as it breaks this level, maybe get to around 1.7000, it's going to make a fast move like this. Okay, and then correction of that move is the beginning of the Y structure. Okay, you know we are looking for WXY, and then you have here 1, 2, 3. That's W. 1, 2, 3. That is X. We'll now be looking for 1, 2, 3. That is Y. Before we now move down to the downside. Is that okay? So I don't want to make this video extra long. I have a lot to teach you. I have a lot of setup, to teach you. But some of these things, you must just understand the theory. You must know how to relate the theory together. You must know how to form, how to make an opinion of the market. And you should know how to relate the fundamental analysis to the technical analysis. Align the two analyses together And when market behaves in a certain way, you must be able to give an explanation to reason why market is behaving that way. It's very, very important. All right. And you must also take a clue from the DXY that I told you. You see that as soon as this market breaks this low now, and there is impulsive move to the upside, you go and check DXY, its setup is ready there. It's already making a push. So if DXY is not moving, no other pair will move. All of them tend to be silent. So even the US oil that you are talking about, it is priced in USD. All commodities are priced in USD. I was giving you explanation to why DXY control liquidity in the market. The reason is not just because USD is a reserve currency of the world. No, it's not just the reason. Another reason is that most of the commodities in the market are priced in USD. You want to buy gold, it's in USD. You want to buy Bitcoin now, it's even related more to USD. You want to buy silver, it's in USD. So most commodities you want to buy is priced in USD. When I say price in USD, I mean global market price. You want to buy crude oil, okay? You want to buy crude oil. Crude oil is priced in USD. It's priced in USD. So that is why it is what is determining the liquidity in the market. That's what is driving the volume in the market. So if you know how to expertly make use of, of TXY, then you'll be able to use it to time your entry on other currency pairs. So that will help us a lot. And I think I've been able to do a lot for you today. Next time we meet, we do more. I don't know if anybody has any question. Somebody has a question. Let me just attend to that. Hold on, guys. Somebody said, how do I get IDC chart on the trading view? It's not difficult. Just go to the pair. Do you see it? I've tapped this pair. So instead of you just clicking the first one, you don't tick the first one. Just trace by the right-hand side here of all resources, all sources. You see, these are all sources that provide market market data. Then you can just tick IDC. Look at IDC number what? 1, 2, 3, 4, 5, 6. Number 6. Tick IDC. IDC gives you a better data than other one. Can we test? Look at IDC here. You see the range of data that is provided for you. Let's go to monthly. You need this IDC only when you are dealing with monthly time frame. Can you see everything you can see on IDC? Okay, let's go to the first one, which is FSCM. Can you see what it provides you? So we as Elliott web traders, this is not enough for us to form an opinion. But when you come to IDC here, real quick, guys. Okay. Mute all. Correct. So when you come to IDC here, can you see the other one stopped here, but IDC moved further. See, it has a bigger data. So with IDC, we can know that this pair was coming from this area, and we can know that this is an impulse. This is one leg of the correction. This second leg, impulse again, and it come down. It's simple. Can you see? Can you see what I've just done? 1, 2, 3, 4, 5. Let's say this is a 5 whip to the upside. This is an impulsive leg down. This is impulse. This is impulse. 1, 2, and 3. Then this one will move up, catch this level, then move down. This becomes A, B, and C. So this one will be taken as correction of this move to the upside. Then you now have this again. Can you see? So you can make informed opinion when you are dealing with a data provider that can provide that data in a long for a long period of time, not for a short period of time. All right, so that's how you get IDC. The other one says, since we are expecting an expanding flat, aren't we supposed to consider the 78.1% fib retracement instead of C? Yes, now it's not a must that it must be 78, but it is something that you have to anticipate, that every zigzag, every expanding flat, we want to come to 78. Why would they want to come to 78? Because if you have an impulse here, the first leg of a zigzag, once it's an impulsive leg, and is almost getting to 50 to 61.8, you cannot treat an impulse as a correction. So you must wait to see another one develop. And if this one that develop up to 50 to 61.8, by the time you are getting a push to the upside, that will be equal leg of this to this, it will have hit 78. This is where the idea of 78 comes in. The same thing is applicable for an expanding flat. You have an impulse, you have a correction, let's say a three-wave structure up to this level. But instead of this one to form an impulse, that is a continuation, it's now coming in form of three-wave structure again. Then you know that you are going to have another three-wave structure to the upside in equal size and form with this one. And by the time it makes such a move, then you already have what? An expanding flat. And this expanding flat will have come to what? 78% fib retracement. Do you understand where that is coming from now? So that is where the guide is coming from. And in most cases, you see that it must break this top. Why? Because every price level between here and this here is a fair value. This is where retail trader operates. But you want this to break up here to come to the level where bank operates. Okay? And when you come to where bank operates, that is where you can essentially come into this market and make an entry. Is that okay now? So that is how we see that. So I believe there is no other question. Otherwise, you will have send your question to the chat box. But since there is no other question in the chat box, how do you draw the demand zone? Okay, we have answered that. Since there is no other question in the chat box, I want to wish you guys a great weekend. And then thank you. Somebody say very interesting. Thank you. Thank you. All right. So please just go back to the videos on Elliott wave theory, study them, learn how to relate it. These are some of the practical guides I'm showing you here. With that, you definitely come on top. So I'm going to make this video available on YouTube so that you can go back and watch again if you want. So, and if you are watching me right now, you have not subscribed, just consider to subscribe. It's very important. And make sure you press notification icon so that you can receive my content as soon as I drop them. All right, so see you next time, guys. Enjoy your weekend. Peace.
Yeah, thank you, sir.